Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro and my eToro username is 𝗃𝗶𝗱𝗲𝗃𝗀𝗃𝗀𝗀. Thanks very much for listening to my video today, and as usual, if you can please don't forget to like this video and subscribe to my channel. That will be really helpful for the YouTube algorithm. So in today's video, I'm going to be talking about what happened in the markets last week. And I'm also going to be talking a bit more about my individual strategy and also some of the trades that I have done. Before I get started, I just want to say, I want to give my respects to Queen Elizabeth II, who died quite tragically towards the end of last week. As a British person, I wanted to pay my respects to her. No matter how you feel about the monarchy, I think most people can agree that she was a very loyal, dedicated and hardworking person who had the best interest generally of the country. So I really just want to give my deep respects to her, and obviously long live the new King Charles. So as I get started to what happened last week, our portfolio actually did really well, and it was up about 4.53% for the week, which I was really pleased with. And if we compare that against the Nasdaq, which was up about 4.2%, and the S&P that was up about 3.6%, I think our portfolio did very well, especially as we have some European stocks that didn't go up as much as their US counterparts. However, we did have Bitcoin and some other cryptocurrencies which did rally quite strongly. So as I mentioned last week, was a strong recovery for the US and the European markets after a very difficult last couple of weeks since the Jackson Hole meeting of the Fed. As I mentioned, crypto rallied pretty hard, and I'll go into some details of that in a moment. But a lot of that is to do with the anticipation of the Ethereum merge, which will happen this week, as well as a kind of bounce back in risk on type of assets. We also did lots of short-term trades last week in a number of different assets, but just to name a couple, we did a short-term trade in 𝗱𝗶𝗀𝗃𝗀𝗀, which was a long trade. We also did a short-term trade in EWJ, which is a Japanese ETF. We also did several trades in carbon emissions and oil, as usual, as we usually do last week. And also we did a trade in 𝗃𝗶𝗴𝗏, as well as 𝗃𝗶𝗴𝗏, which is a Hong Kong stock, which we had a short position on, as well as another short position on enphase, which has really been roaring recently, and I thought it was due for a small pullback, as well as EOS, which has also done well as we compare that with the rest of the crypto market over the last kind of month or so. And it had a nice little pullback. So we made quite a few kind of short-term profitable trades there, which helped our overall portfolio. If we look at the 2022 benchmarks, we're starting to catch up with them after a kind of quite a poor start to 2022. Our portfolio is down about 29%. If we compare that with the Nasdaq, which is down about 22.6%, and the S&P 500, which is down about 14.7%. Bitcoin and obviously cryptocurrency still very heavily down for the year, which kind of explains why I'm underperforming the other indices mainly. And then Bitcoin is down about 52.19%. But if you look at my portfolio as a whole, I think that we have a lot more upside potential than a lot of those indices. And I think that when kind of crypto comes back and we see a nice recovery and also some of our stocks start to pick up, then I think that we will start to make ground on those indices. And I'm kind of quite positive on the next couple of months ahead. So if we look at the main news last week, and I think the main news is that the market is starting to kind of price in, and that's why we've seen some of that recovery starting to price in inflation lower and calling inflation expectations. So we have the CPI to be released this week. This is the inflation data that will come out very shortly, and it is expected that that should be lower than it was the last month. We've seen a big call off in terms of especially commodity and energy prices, and things like secondhand cars, which were really kind of driving up the previous CPI when we reached peaks, you know, a few months ago, and that is expected to come down. We also saw some more dovish sentiment from the Fed last week, and there was a couple of different representatives who were mentioning that they didn't think that we would go into a deep recession in the economy, which was generally seen as dovish. As I mentioned, we've seen some lower oil prices. We kind of dipped well below that $90 a barrel mark, and we're kind of at the lowest range that we have been for, you know, especially over the last couple of months. I think we're about $86 or $87 a barrel at the moment, and that has been really good to kind of offset some of that inflation. We've also seen some governments, especially in the UK, where they are going to potentially put new energy bills and new stimulus for energy bills to try and circumvent some of those high oil prices that have been in place. As I mentioned, the UK Queen of England died, Queen Elizabeth. Again, my respects go out to her. And that was in a week where she had just appointed a new Prime Minister to take over from Boris Johnson in the UK, and that was just a couple of days before she died. So they're also a new Prime Minister in the UK. We also saw the British pound depreciated further against the US dollar, and it's retraced now to lows that we haven't seen since 1985. The US dollar has got very strong, and a lot of the currencies, especially the European currencies such as the British pound and euros, are very at kind of historic lows compared with the US dollar. Also the Japanese yen as well, and the Chinese yuan is also suffering. We also saw the ECB increase its interest rates by a record 0.75 percentage points last week in a bid to curb inflation. As I mentioned last week, it was expected that the ECB and the markets were pricing in the fact that the ECB might increase their interest rates by 0.75%, and that is exactly what happened. As I've mentioned at the beginning of this whole process on increasing the interest rates, the US acted a lot more quickly than Europe. And that is why I think that the US has peaked in its inflation much before Europe and the UK. We've also seen the UK continue to hint at higher interest rate rises, and that's expected to happen over the next kind of month or two. However, in China, we saw some quite good news, and we've seen factory gate inflation is declined in August from July as the data was released. And this is pretty good, seen as pretty good generally for the overall economies around the world. And often when we see factory gate inflation peak, then as it starts to go down, we start to see kind of CPI around the world start to reduce, which is a good sign. We also saw China is taking steps to try to decelerate some of the weakness that's happening between the RMB versus the USD. So they are providing a lot of kind of support in the fact that they don't want, although it's quite good for them when the renminbi does depreciate against the US dollar, because it makes their exports obviously makes it cheaper for countries such as the US and also Europe to be able to buy in exports. However, they don't want it to drop too low, so they're starting to make progress in trying to decelerate some of that weakness. As we move on to the top 3 performing stock of last week, and the top performing stock last week was Coinbase, and that was up about 23.92%, and that is mainly to do with crypto had a very strong week last week. We saw Bitcoin, lots of other cryptocurrencies rising. Coinbase had been suffering a lot over the last couple of weeks in particular, so it was a nice little bounce back in Coinbase. The second best performing stock last week was Marstons, which is a UK pub chain, and that was up about 18.92%. And we also saw Wix, which is a US stock, was up about 15.56%. And that is generally quite a high beta stock, it's a high growth stock, and they performed particularly well last week. So as we move on to my usual death by charts edition, and I just wanted to go over a couple of different charts. So the spending in the US has stayed quite constant. We haven't seen a big dip in spending yet. So a lot of people will ask, well, if people are still spending as much, then where is that money coming from? And we haven't seen that big dip in spending yet. And the answer is that savings are coming down. So the savings rate is decreasing. If we look at this chart to the left, we can see that savings started to kind of increase when we had the first and second stimulus checks, which were provided. And then we saw a bit of a dip down after that as people went into their savings during the pandemic. And then obviously there was the third stimulus check. And now we are at the lowest levels since 2009, down to about 5% people have saved. So this is a sign that people are kind of diminishing their savings. What we could see next is we could start to see lower spending as that money starts to run out. Also, to back that up as well, we've also seen the US consumer credit increase as people kind of take more and more credit to be able to afford things. The other chart that I just wanted to look at is the chart to the left, and this is the US Strategic Petroleum Reserve. This is basically the backup petroleum reserve that they have in the US for obviously if there's to make sure that they have enough oil, even if there is a lack of supply, they'll go into some of that strategic petroleum reserve and use that. As you will see in certain periods, especially where the oil price was quite low, they often try to replenish those strategic petroleum reserves as much as possible. However, over the last kind of year or so, we've seen that strategic petroleum reserve reduce as kind of prices have gone up, and also there has been the reduction of supply from Russia. So we're seeing that petroleum reserve be used. And again, and probably another reason why we have such high oil prices. If we look at the second chart to the right, and I've gone through this before, but I just wanted to have a little update on it. The used car index has also reduced. So this means that the price of used cars has gone down. It's gone down about 9%. Obviously, at the start, kind of 2021, kind of mid 2021, as we had those kind of supply chain bottlenecks with new cars, we saw the prices of secondhand cars increase quite a lot. And this again contributed quite heavily to the heavy inflation that we had. So it's a good sign that this is going down generally for the overall CPI in the US. So as I move on to the crypto news and views, it was actually a really great week last week for crypto, and crypto has now moved up to about 22,300. Bitcoin has moved up, which is really great. And obviously last week we were kind of testing below the 20,000 mark. So to go up and be at much higher levels is a good sign of things to come. And again, I really think that it's a good chance that we have hit the bottom, which was about 17,000 for Bitcoin. But there's a lot of things that we need to watch, and we're still generally in a risk-off environment. However, last week was quite a good week for risk assets as we started to kind of digest that inflation could reduce in the CPI report. There was also a report from the White House last week, which was talking about proof of work. There was a little bit of a fear because there was one paragraph in there that said that proof of work could be negative for the environment, and it's something that they need to kind of look in more detail about. This by no means was saying that they were going to ban proof of work. It's just that they were going to have some more investigation into it. Obviously, there is a lot of literature out there now that proof of work doesn't have too much of a negative effect at all on the environment, and that more and more of proof of work mining is using renewable energy resources, and that is increasing year by year. So it's not something I'm particularly worried about them banning it. We also saw MicroStrategy, who actually submitted a press release last week to say that they could potentially convert up to $500 million worth of shares in order to further purchase Bitcoin for the balance sheet. Again, this shows Michael Saylor's real conviction for Bitcoin and him wanting to take the opportunity to buy Bitcoin at a much lower price and reduce his average cost. We've also seen Ethereum continue to rally in anticipation of the merge. The merge is due to happen in about 2 or 3 days. Just to make it clear on really what the merge actually means, is the merge will change Ethereum from proof of work to proof of stake. So there's a lot of work that's ongoing in order to be able to work out the technical vulnerabilities for the merge. And I think it's generally been a very good thing for the market, but I don't want anybody to start to think that this is the full kind of upgrade for Ethereum. This is just a part of it, moving it from proof of work to proof of stake. This will not make the transactions any quicker or any cheaper on the network, and they will not put in place sharding or anything like that yet. That's going to happen later on in the future. I think a couple of things I just want to talk about on the Ethereum merge. One, there's always the chance that there could be technical issues, or whether those be small kind of speed bumps in the process, or those can be larger technical issues. Not expecting that, and I think the probability is very low of that happening, but we must always be cognizant of that. The other thing is, which always can happen in crypto, is you could have the kind of sell the news event, and traders could start to take profit, and we could see a dip after the merge, but obviously no one can ever be sure about what's going to happen in that regard. We also saw a big pump last week from Luna, so the Luna Classic chain, LUNC, and also Luna 2.0, the new chain, increased quite significantly last week. That is because they've put in place a new burn mechanism for kind of transaction fees on the Luna Classic chain, and that will make Luna Classic deflationary. I think that, again, a lot of people have kind of got ahead of themselves, and they see it's rising and they see that it's deflationary, but we still must know that There's a very high supply of Lunar Classic. After Lunar Classic went into a death spiral, obviously just a few short months ago. So I think everybody needs to keep their expectations in place. I don't have any in the portfolio, don't plan to add anything, and I think that it's still very high risk, but I just wanted to explain that. The other thing I wanted to explain is that Binance made an announcement last week as well, that they plan to convert all stable coins except for Tether into BSUSD, which is basically the Binance stable coin. The reason that they gave for this was that they wanted to provide kind of more deeper liquidity, especially for trading pairs, where especially during the bear market, trading pairs can be quite sparse. This doesn't mean that people can't get out the USDC and other stable coins from Binance. You can still send them out of Binance as per usual, but I think they just wanted to make sure that they had some kind of deeper liquidity. I don't believe that there's any issues there with Binance, but it's something to always keep an eye on. So lastly, just to run through some Bitcoin charts, and what I really wanted to just explain a couple of different things in this segment. So I wanted to say that although Bitcoin has had a little bit of an increase over the last day or two, we are still sitting at what's called the Bitcoin dominance low. So we haven't been this low in terms of the Bitcoin dominance since about the end of 2018. So it's at about 40% Bitcoin dominance. And this is usually a good sign that Bitcoin has kind of hit its low for the cycles or has got very close. And I'm expecting that Bitcoin dominance will start to go up as the Ethereum merge hype has started to come down slightly. I can see a lot of people moving some of their funds over to Bitcoin kind of on a longer term basis. Chart on the right, I just wanted to really give you a bit of perspective. It's very easy to kind of get into the day-to-day movements of the markets and where we are. You have a lot of fear, you would then have a lot of hope, and you have optimism, etc. But I just wanted to look at the Bitcoin price over time. And as you can see, the Bitcoin price has continued. If we look at the Bitcoin price on this date in particular, this was taken a couple of days ago, the Bitcoin price has increased kind of year on year as time has passed. Again, there's a couple of anomalies on that chart. Obviously, this time last year, the Bitcoin price was at about 45,000. I know a lot of people, including people listening to this video, would have invested around that time. However, if we look at kind of a longer term pattern, longer term relationship, the price has continued to increase. Again, I think that the lows are in, or at least very close, and we're kind of moving into that next stage of the cycle where we bounce off those lows and we start to kind of hit a ranging pattern for a period of time. So I think it can go a lot higher in this ranging pattern, although I don't expect us to hit all-time highs either this year or kind of in the early part of next year, especially until the next halving. Thank you very much for listening to my video today. Also, don't forget to join my Discord group if you haven't already. Make sure you join that. We are regularly having really great discussions, always having a lot of fun, and I'm always on hand to answer any questions that you may have. So thank you very much and have a great week ahead. And I hope that we continue with the markets having a good week this week.